Hey guys, Dave Keller here with Market Misbehavior. Today we're talking about the ARK Innovation Fund. The ARKK has had a nice rally going into February, but now consolidating what might be next for this key ETF. So when you look at the chart of ARKK, the ARK Innovation Fund, you see what I would describe as a bullish pennant pattern. Today we're going to talk about what that pennant pattern actually means, how you can analyze it, how you can validate it, and how you can measure a potential objective when we exit the pattern. Before we get to the chart, by the way, if you like this sort of thinking about technical analysis, behavioral investing, sentiment, breadth, all those good things, won't you subscribe to my channel? Also give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Are you bullish or bearish on ARK at this point? Let me know and why. Looking at the chart here of the ARK Innovation Fund for the last 6 months, we can see the new low that it made for the year going into year end. So while a lot of things had actually, including the market itself, bottomed out in October, the S&P and the NASDAQ rallied, the ARK Innovation Fund actually made a new low into the end of last year. So the beginning of the year looked pretty dismal. From there, though, ARK, along with a lot of other emerging technology names, along with things like the FANG stocks and others, had a really brilliant start to 2023, with January being an incredibly strong month. February has been all about a consolidation, and when you have a big move to the upside and then a consolidation phase, and when the consolidation phase looks like this, lower highs, higher lows, it's what's called a bullish pennant pattern. Now, the way you can determine it's a pennant pattern, first off, it has this sort of consolidation, this narrowing of the range, right? So lower highs, higher lows. So an uptrend is higher highs and higher lows. A downtrend is lower lows and lower highs. When you have lower highs and higher lows, it's what's called a symmetrical triangle pattern or a coil pattern, basically where the range is narrowing over time. If it's a short-term consolidation, a really small triangle after a big move to the upside or a big move to the downside, you call it a pennant pattern. And it's all really about the size of the pattern relative to the move leading into the pattern. With the move off of the lows for about 5 weeks and then this 2-week consolidation phase, I think it's fair to call it a pennant pattern. So you basically would label this the flagpole from the low in December to where we peaked out in early February, and then this is the pennant. Now, going through all that labeling is less important as to what it represents. So here's what I would tell you about a pennant pattern. A pennant pattern, like all consolidation patterns, represents equilibrium. It basically says buyers and sellers are in general agreement that ARK is worth about 41 to 41.50, and basically we traded up to that level right here in early February. From there, we've basically overshot and undershot the equilibrium price. All right, so the market sort of has a sense of where this is, and when we sort of rotate above and below, we're basically vacillating or consolidating or oscillating, I guess, around that equilibrium price. What's interesting about that price, by the way, is it lines up really well from the swing high in October and November. So basically, we went down to a new swing low, just around $30. We came right back up to that point, and now we're sort of treading water. We're sort of rotating around that point. When you have a pennant pattern, again, a narrowing of the range, a consolidation, one of two things is going to happen by definition. Either we break out of the pattern to the upside, or we break down out of the pattern to the downside. And we know that because there's a natural end to a consolidation pattern like this, right? A triangle or a pennant pattern has a point called an apex where the pattern is done. So usually about 2/3 of the way to 3/4 of the way through the pattern is when you usually get a resolution. And the way you have a resolution or you validate the pattern is by breaking out, either above the resistance level or below the support level. You need to have 4 points to make the pennant, right? You need to have 2 highs that come together or slope downwards and 2 lows that slope upwards. So I think as of today, we can call this the lower end of the triangle pattern of the pennant pattern. So now we're waiting to see which way we'd break. So in the short term, depending on how quickly we'd rally, we either get above 43 or we get below around 39.50. And whichever way we break, that most likely tells you the next direction to be had. Because think about it, we now are at an equilibrium. At one point, we either break out to the upside, which tells you buyers are taking control and there's more demands than supply, more optimism and potential to push the price higher, or we break to a new swing low, which initiate a pattern to the downside. So what's next? Well, the pennant pattern on its own actually doesn't have a direction. So it's not a pattern that automatically closes higher. However, you usually think of a pattern like this, a triangle pattern or a pennant pattern, as a continuation pattern, meaning when you've had a run up, and then a consolidation like this kind of pattern usually resolves to the upside, meaning you're probably waiting for a break above around 42.50, which would clear the way to go further to the upside. Now, how much further? What you basically do, the traditional measurement technique is to look at the height of the flagpole, right? So what's the trend leading into the pattern, and then project that sort of similar move coming out. Now, there are a lot of different ways to measure that. I am not super hard line about a particular measurement. Some people are very particular about you need to take this exact low and go to this particular point. I don't think technical analysis is that, and I think any investing at this point is that particular and is that specific. I don't think that's the reality of life. So what I do is a general mathematical technique. Take the height of the pattern from 30 to around 40. That's sort of the lower end of this pattern where we gapped up and where we started to travel around. That's about 10 points. So if we would break above 42.50, we'll add another 10 points and take it to 52.50. What's interesting about that in my mind, that would take us right to the August 2022 high around 53, right? So if you look on a closing basis, if we would continue, if we would resolve this pattern to the upside, break to the upside, I think a simple measurement technique would give us an upside objective back to those August peaks. That would coincide, generally speaking, with the S&P returning to around 4,300. In all of our work, thinking about upside projections for the S&P, it's hard to imagine the S&P getting materially higher than 4,300 before sellers would come in or before there would be an exhaustion of buyers. That's why we think that's a reasonable upside target for ARK Innovation Fund if and only if we resolve this pattern to the upside. Just to wrap up, as a reminder, there's no, while this is generally considered a continuation pattern, the most likely outcome is a move to the upside. These patterns can break down to the downside, which is why it's not a guaranteed obvious buy signal today. You have to wait for that validation. So if we don't confirm this breakout pattern with a move above the upper boundary, you look to see if we break below the lower boundary. And if so, that's when the potential or a likelihood of a retest of the December lows would be pretty possible, if not probable. So this pennant pattern is an important one to watch today. Number one, because it represents equilibrium, represents a consolidation. Number two, represents the fact that the ARK Innovation Fund has had an incredible run off the lows in December and now is sort of in that consolidation phase. It generally would probably resolve to the upside, suggesting that there's another big leg higher for ARKK, but and it's a big qualification. You have to wait for that validation of a break outside of the pattern. There's no guarantee that's going to happen, which is why you want to monitor that downside boundary as well. When I'm looking at a chart like this, I like to keep those lines on the chart and watch and reflect on that chart and see which way we break, and then start to do some other measurements and analysis of the price and the trend if and when we would resolve that pattern outside of those levels. I hope you found this as an interesting breakdown of the ARK Innovation Fund, particularly the pennant pattern that we're seeing. A bullish pennant pattern with a likely resolution to the upside, but not a guaranteed buy signal at this point. If you like this sort of thinking about pattern analysis, technical analysis, and behavioral finance, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Do you think this pattern resolves to the upside or downside, and why? For ARK Misbehavior, I'm Dave Keller. Be well. See you again soon.